Good morning. I am Mehdi Sandaji, and we are live at the Crypto Dome on OETV. And we're here with Adam Blumberg, co-founder at Interaxis. Adam, welcome to the show. Oh man, this is kicked off in a bad way. Adam, I can't hear you, mate.
Here we go. Now we're on the live version. Of course it happens on the live version,
because it's
right?
live.
Of course.
It would be weird if we didn't have a little hiccup, especially talking about crypto. We expect hiccups, and that's the way we are. You know, we duck and roll with these things. But welcome, mate. Good to see you.
Good to be here on a holiday week. Holiday week, but crypto isn't taking a break.
Crypto never sleeps, and it's certainly been quite the volatile few days, weeks, however we want to put it. As we're talking, I feel like Bitcoin's around 18,000 and change, edging up towards 19,000, maybe not. We've now seen all these pundits coming out quite aggressively highlighting, their genius calls that Bitcoin's going to go down, and they're now calling for a 12 to 16,000 level. Let's put those guys aside, right? Because everyone just wants to make a headline for themselves and their YouTube followers and whatever it is. So away from the noise, some of the things that kind of grabbed me this week and maybe made me a little nervous were things like the Bitcoin miner Poolin. They suspended withdrawals, right? And that's kind of a scary thing, right? You've got your money being held somewhere and suddenly you can't get access to it. And, what do we think? This has got to be putting a lot of pressure on people mentally.
I think it's worrisome, Mehdi, because and you're right. Like it puts a lot of pressure on people. It's their money that they feel like they've earned, that they should be able to take out, or money that they're saving. And look, during I guess we call them the heydays of crypto, which was way last year, probably not even 12 months ago. There were no issues and no worries like this, and people were just buying Bitcoin wherever they wanted to, mining Bitcoin, doing whatever they wanted to do, and there were no issues like this. And now all of a sudden these things come up. Of course, we had Celsius and Three Arrows Capital and Voyager earlier. We had the issue with Terra, and now we have Poolin halting withdrawals, and it makes people do a double take when they're just going to invest in it. Now, you and I have talked a little bit about there's the idea of investing in something like Bitcoin or getting exposure to it and hoping it goes up versus actually utilizing the system and utilizing the Bitcoin network or utilizing the Ethereum network isn't changing that much. But the idea of people investing in it now, especially retail, they're getting a little worried. And look, maybe down the road, people understand wallets a little bit more and understand, look, I can just have this Bitcoin and hold it in my own wallet, and it's a lot safer there, and I don't have to worry about these things. But for the time being, we're not there yet. We're still at the point where, if I forget my password, I want to hit a button and reset my password. And that's not a Bitcoin thing.
And it also, I think the recent moves have highlighted that there's definitely a lot more froth in the market from a investment slash speculative kind of view versus people trying to get more accustomed to the rails and the technology and everything. Because, if I'm Joe Blogs, which I guess I am, and I put $100 into Bitcoin to, a couple of months ago, a couple of weeks ago, it was at 35, $40, let's say, and now it's half. My $100 is now 50. I'm nervous. These aren't things that, you kind of want to embrace, wholeheartedly. And, and also take, if I've got my money sitting there in a USDC in Binance, right? So now Binance is coming out and they're making changes as well. So we've seen all the stuff happening with stable coins. We saw Luna and all these types of things happening. Now Binance has come out and said that they can happily convert all balances from existing US stable coins like USDC into their own stable coin, BUSD. Like, how's that happening?
Right. And I mean, what you're alluding to, we'll talk about the Binance thing in just a second, but it's the fact that people are really learning now that there's a difference between crypto on an exchange and crypto sitting in my wallet. Right. And I will, harken back to the early days of the internet when people started to learn a little bit about the difference between how the internet works and how internet stocks work. Right. And that's kind of the difference. It's like Amazon stock at the time went up and down, and it went down precipitously, even though people kept buying things on Amazon. So I think what people are going to learn is there's a big difference between crypto on an exchange and crypto that I might hold in my wallet, and the way the rails work. But going back to what you discussed just a second about Binance is, as you said, Binance is taking USDC, I think PUSD and TUSD, I believe. There are a few other stable coins that they have. And if you hold any of those, they're automatically converting them to Binance USD, right? So they're taking USDC, which is US dollar coin issued by Circle here in the US, and a few others. And if you hold those on the Binance exchange, they're converting them to to Binance USD, which is their stable coin. Now, on the surface, it actually seems like a bad thing, like you brought up. You have no choice in the matter. But in reality, it's actually not that bad. It's not as bad as it seems. And the reason is because, one, I can still make deposits and withdrawals in USDC. So that isn't halted at all. It's not, they don't plan on that changing. One of the main reasons they're doing this, Mehdi, is because you look at liquidity across the different pairs, right? So a pair would be there's a Bitcoin USDC pair, meaning if I want to sell my Bitcoin and get USDC, there has to be a market for it in Binance, right? There has to be a pair that says I'm trading out Bitcoin for USDC, and there has to be someone willing to pay USDC to buy Bitcoin on the other side. There's also one of those for Bitcoin and Binance USD, and for Bitcoin and Paxos USD, and all these others on their exchange. And what that leads to, Mehdi, is potentially a lack of liquidity. What it leads to is the price versus Binance USD might be different than the price versus USDC. What Binance is partially saying, and this is just if I put myself in their shoes, is let's just make one big pair, which is Bitcoin and Binance USD. And in the background, we can make all those conversions if we want to. And that way we get more liquidity in Binance, in Bitcoin and in Ethereum and some others that trade heavily against something that looks like a dollar. So that what they're actually doing isn't all that bad, as long as I can still get my money out and put my money in USDC.
Well, let's hope they don't shut down access like some others. So like Poolin.
That's right, that continues to be a big concern, and I think now more than ever, like crypto's been around so long, right? Now more than ever in the last 2 years, people are starting to wonder those things about, is this exchange going to be able to hold my money? Are they going to be solvent? Are they going to let me take my money out? But then if we go to the decentralized side, right, some of the decentralized, there have been issues with decentralized finance, and most of those are regulatory. So, you kind of feel like, which direction am I going to go? And retail investors, I think, are getting a little worried about that part. Is, am I safe with this investment? Not from the perspective necessarily of it going down in value, which is a whole different subject, but is it still going to be there?
So, all right, that kind of vaguely rolls me into my next conversational point of Ethereum, right? So we're seeing a lot of widespread sell-off in the whole crypto space. It's very hard to kind of put fundamentals into something, right? When everyone's yelling there are no fundamentals. But let's allude to the fact that there is a fundamental story in Ethereum today at this point in time. We're going into the merge. We're in the process of the merge where we have a catalyst in this coin, right? And these rails, right? And why is Ethereum? Have people lost faith in this? Because it feels like it shouldn't be behaving as badly as it is due to external factors, which could allude to some sort of fundamental basis in this.
Right. Well, that's the key is, right, it could. And I wrote a long Twitter thread the other day talking about all these people discussing, is the merge priced into Ethereum? Now, on one hand, you do have ETH moving in line with Bitcoin and everything else in crypto, right? Bitcoin moves up and down, ETH moves up and down, and part of that is retail investing, and part of it is just that the economy is just rough right now. And as we've said, there's options now. Interest rates keep going up. I can get risk-free rate somewhere else that in dollars, where I'm going to make a higher interest rate on my bonds than I've made in probably 15 years. So you have that issue. But on the idea of the Ethereum merge, look, you and I know this. Everything is priced in. Okay, because everyone knows all the information. It is incredibly public. Now, I think what we're not necessarily what we're seeing is some investors going, I want to own ETH because I can stake it and I can earn some interest. And after the merge, when ETH becomes deflationary, and this goes to your fundamentals argument, after the merge, we can have a more fundamentals based value conversation around ETH. However, the merge is a monster risk. We've said it before on this show. It is the equivalent of changing your car's engine from gas powered to electric while driving 100 miles an hour down the highway. That's what they're trying to do. There is risk in that moment and probably the moments thereafter when Ethereum moves from the proof of work chain to the proof of stake chain. There are just risks there. And I think people are pricing in the fact that, look, something could theoretically go wrong. There might be some bug or some exploit that we didn't know about. And until we see it work for several blocks, one after another after another, I think there's just going to be a little bit worry. So it's priced in. What's not priced in is a 100% successful merge, because we can't guarantee that's going to happen. If it's 100% successful, then we have the opportunity to do more fundamental analysis on ETH. But we don't have that until we know that the merge has been successful.
Let's say we come out of this whole thing, we see a few blocks. We'll know pretty quickly if this is fundamentally worked, but the transfer from proof of work to proof of stake has actually been successful. It'll be a few blocks and we'll know if this is going to work.
It seems that way. It seems like it'll be a few blocks. Now, look, all of these things are a little bit subject to like exploits and hacks and things like that. And maybe there's some really smart hacker that goes, like, I'm going to wait a month. I'm going to let everyone think that everything's cool, and then I'm going to start draining money out, because everyone's watching it for the first few blocks, and they can't get away with anything. I don't know what's going to happen. I'm not a coder. I'm not a programmer. I haven't looked at the code. I have to imagine that all the really, really smart people that are building this and making these changes to the code have thought of these things, which is why the merge has taken so long, right? It was supposed to happen 2 years ago, and it just keeps getting extended and extended because they want to make sure they're doing it right. But there's a lot of risk there. And it's coming at a time when the economy is not very good, when people are unsure of their jobs and people are unsure of inflation and housing and everything else, and whatever's happening in Europe. So it's an odd time to be having such a huge change on a major public blockchain like this.
And Joe, as an addition to that, there was an article about Cyberbank coming out and saying they would enable staking of ETH as the merge nears, right?
Right.
Is this a significant milestone, the fact that a traditional bank is getting involved in this?
I think it's relatively significant. Look, anytime anyone from the traditional side,
and obviously the Swiss as well, right?
So, right. Yeah, I mean, they're all about security and safety of your money, but they've also been out ahead of the crypto trend, ahead of the US and ahead of most of Europe and stuff. Like they've been well in front of most of what's happening in crypto. There's a big, area in Switzerland called Crypto Valley, in Zug, Switzerland. Mm-hmm. So they've been a little bit ahead. But look, anytime there's a traditional finance anything that comes into the crypto world and gives some sort of thumbs up or vote of approval or whatever, then I think we kind of like that at first, and then we take a step back and go, okay, what are they really doing? But for SIBA Bank to say we're going to allow, ETH staking, and they're going to handle the custody and they're going to handle the actual validating and such, I think that's a good thing. I think it's good to have more validators on the Ethereum network, so you don't just have 3 huge staking pools. So it's good to have another staking pool. It's good to have it in Europe. It's good to have it with Switzerland, who we all see as being always very neutral in terms of financials. So like, I think it's a good thing. I can't see too much bad coming from this. I think it's a good vote of confidence. And going all the way back to the beginning of our conversation, people worried about their money. Well, you don't worry about it as much if there's a bank tied to it, right?
Especially a Swiss bank.
Right. If there's a Swiss bank tied to it and they're saying we're going to allow staking, then if I want to get into crypto, how much safer can I feel?
That's a very fair point. And, that kind of rolls into our next conversational piece, regulation.
Of course.
We always like to have a little regulatory chatter.
Sure.
So there's been talk from skeptics like Congressman Brad Sherman, who wanted to outlaw digital assets. But it sounds like the House Dems in California don't think that'll happen anytime soon, which is always a positive thing to hear.
Right.
But did you see that Gene Ludwig, the former U.S. banking regulator, he's now running, he's obviously cashing in. He's running a consultancy firm based on the regulatory side, and was highlighting that the federal government obviously doesn't like unregulated third parties creating their own currencies, which effectively this is what it is, right? And the solution he's proposed is, ironically, that the banking industry is the right tool or the place to do it because it's regulated. But that's kind of the polar opposite of the existence of cryptocurrencies, surely.
Right. And this is a huge existential conversation to have, right? Is you have this tug of war between what we've talked about almost this entire episode, Mehdi, is feeling safe and secure with my money in crypto, the same way I feel safe and secure with my money in a bank, the same way I feel safe and secure with my money in a brokerage account. People want to feel that way about crypto because they've been used to that. And now we have cryptocurrency, which is, as you said, and banking regulators have said, you're creating a new currency. You're not allowed to do that. You're not like we do that. The U.S., the Fed does that. Bitcoin doesn't get to, ETH doesn't get to, no one else gets to, MakerDAO doesn't get to create DAI. We create the currency. And if we're going to do that, it should fall under banking regulations. It should fall to the banks to do it. And all the crypto people say, the banks got us in this position. The whole point of this is we put way too much power in the hands of the banks and the bankers. And maybe the regulations that we have that are hundreds of years old, some of them, don't fit with the current technology, don't fit with the current economic climate, don't fit with just what's going on in the world. And therefore, we need this. And there's just going to be this tug of war. And it does feel wrong to have banks issuing crypto, issuing stable coins. It doesn't feel right. It feels like we're going back to the same thing. Like banks are going to have all this power, which is what got us in kind of the economic situations we're in. And of course, people who have been in finance their whole lives or in banking their whole lives are going to think that that's the best solution because that's what they know.
It's kind of hard to argue with, especially with some of the events like the Poolin side and everything, like against the banking universe to get involved, right? You're obviously going to have the tinfoil wearing crazies who are going to go and hide and they want to be off the grid, which I get as well. We don't want to touch the financial system. We're all about DeFi and et cetera, et cetera, et cetera. But some form of structure and being associated with a bulge bracket, and we all know those tinfoil wearing crazies. Brendan, we love you to bits. Thank you for doing this, but we know you're sitting there with your tinfoil on. But some structure with a financial institution that will put people at ease.
It will likely put people at ease, just like we talked about with SEBA Bank, right? And I think part of what we have to get to is, one, do regulators really understand what is going on here? Do they really understand DeFi and crypto and the purpose for it and the need for it and everything? And I think that's a big issue here, is do they understand it, and are they worried that it's taking away some of their power? Are they worried it's taking away some of the status quo with how the world works, how finance works, and how power works in terms of economics, right? The most powerful weapon in the world right now is the US dollar, and we wield it pretty well. It's been pretty powerful lately. And of course, the government, the regulators want to keep doing that. And there are others in the world, like the tinfoil wearing hat folks, that say, those are the people that are trying to take all my money and take all my stuff, and they control me. And there's got to be some sort of happy medium in between, right? There has to be a middle here that says, I can be safe. And what we have to look at with issues like Poolin and going back to Celsius and Voyager and everything else is, are those short-term blips in the long-term view, the long-term cycles of where crypto and where DeFi go, that say, yeah, that was a rough time. We learned a lot of lessons. We know how we should probably do this a little bit differently so that it's safer for people, so they feel more comfortable, but they can actually use the system for what it's meant for, which is not necessarily buy something and just hope it goes up in value. It is, how do I use something like USDC or Binance USD or Tether or something? How do I use it in my life? And I think that's the kind of long-term arc of this. In the short term, we have issues with people losing their money. We have issues with exchanges not allowing people to get their money off, with poor risk management, all those things that we've seen recently. And I don't think, and this is where you get Adam's opinion on this, which is, if regulators make knee-jerk reactions because some people lost their money, I think you end up with bad regulation that is negative for innovation and probably negative for the future of this industry. Which, there are plenty of people that go, what do we care about the future of the crypto industry? But I think that there's a reason why it came into existence, and there's a reason why it got so popular, and it's not because of pictures of monkeys. As much as you want to think it's pictures of monkeys, it's not.
I think it's all about pictures of monkeys. But also, we're not going to go down the tirade on Tornado Cash again, because we've made that very clear about our unhappiness on that, how that was handled.
Right. Exactly. We've gone down that, and there's a lot of fodder here for regulators. There's a lot of fodder here for legislators. Right. We're coming into midterm elections, and they're lining up on both sides. Right. There are plenty of people running for Congress now that are on the full crypto bandwagon and saying, this is what we're going to do. We think it's important. And partially they're doing that because they raise money that way and they get votes that way. And partially they actually believe it. And then there are plenty on the other side that want those that maybe lost money in an exchange to vote for them. And they go, well, I'm going to make sure that this is all outlawed because my constituents don't understand it, and you lost money, or you have a kid that lost money in it. And therefore, I'm going to make sure it's outlawed. So it's become a political thing too.
That it has, like everything else. Adam, so this time next week, we might know a little bit more about the merge.
It's going to be fun, man. Like next week's conversation is going to be great. I hope, or it could be Adam sitting here with a whole bottle of bourbon. Either way,
let's see how that all pans out. But yes, as always, I want to thank you for your time, and this was a good chat.
It was great, Mehdi. Thank you so much. I'm glad we could do the first live episode of Crypto Dome.
Absolutely. We'll be back next week, same time, same place, and I'm sure the merge will be in discussion. So thank you, everyone, for watching. Don't forget to check out the links to digital assets and crypto education for financial advisors. Our friends at Interaxis will help you better serve your clients, and you'll get a certification as well. Until next time, thank you for watching, and good luck investing.